The views expressed in this podcast are not to be taken as either trading nor financial advice. Neither the announcer nor the Sirius Report make any claims to be certified financial advisors, and all reporting is dedicated solely towards being both informative and educational. Good afternoon, everyone, and welcome to the Sirius Report Market Wrap-Up for Monday, October 21st, 2024. A lot of interesting things going on today. We see a bet that was made by Stanley Druckenmiller, one of the best hedge fund analysts and owners in the last 20 years, make a huge bet that is already seeing dividends. And we'll get to that shortly. We're going to take a look at the different economic data for the week, some of the companies that are reporting on earnings, and a little step in to what's going on with the national debt and what the IMF is saying about it. So with this in mind, let's go ahead and jump right in and see how everything in the markets fared. Well, interestingly enough, because of what is happening in the bond markets, the Dow and the rest of the equity markets, for the most part, had a down day. Dow was down 344 points, closing out and losing the 43,000 handle. After getting an new all-time high on Friday, it closed at 42,931. The NASDAQ was up 50 points, and that's partially due to NVIDIA, closing out at 18,540, and the SP 500 was down 10.69 points to 58.53. And as I mentioned, the primary move in the NASDAQ was due to NVIDIA, which is now have a $3.5 trillion market cap, as it reached its own new all-time high. Now, in the bond markets, yields sprang into life big time. The 10-year is just under 4.2%, closing out up 0.123% to 4.198. The 2-year is back over 4%. And what I was mentioning about Stanley Druckenmiller is he came out and announced on Friday or over the weekend, depending upon when the article was published, 20% of his home office hedge fund is going into shorting bonds. Now, what does that mean? That means he expects that bond yields are going to continue to rise as inflation rears its head due to the Fed's policy and the untenable fiscal policy and government spending that we're getting out of Washington. So the 10-year is up over 0.1% in just 12 basis points in just one sitting. And we're going to go ahead and see how this goes through the rest of the week and, of course, into the rest of the year. Looking at the dollar, well, the dollar got a spike today, up 51 cents against a basket of currencies to 104.01, while gold, which had opened in Asia over $34 an ounce, got as high as $34.34, but was beat down multiple times today by the COMEX, closing out the trading session up 8 cents to 33.85, while gold, which had gotten as high as 27.41, was down $1.90 to 27.19. In the crypto sphere, well, in the last 24 hours, we had a high of Bitcoin at 69,464, but currently from that trading, it was down in the last 24 hours 1.87% to 67,722, while Ethereum was down 2.57% to 26.75. Now, I know that some comments have asked us to talk a little bit more about Bitcoin. I think Paul and I's personal opinions have been made. But in particular, I'm going to bring in on occasion, some commentary from authors who either are for, against, or are neutral to it. And this one in particular is regards to what Bitcoin's utility is, besides the declaration that it's digital gold. In a paper co-authored by Ulrich Binsiel and his ECB colleague Jürgen Schaaf, they've written a paper on the distributional consequences of Bitcoin should it continue to appreciate in value. In the paper, they make the creative argument that if Bitcoin was nothing more than a speculative asset with no other economic or social utility, then continued price appreciation will have negative consequences for the rest of society. Which, yes and no, but it's really limited on what that means. In particular, if more money went into cryptocurrencies that could have gone into the general economy to build businesses, create jobs, provide capital, build schools, etc., then of course it would have negative consequences. But if it remains just something that is being traded by a small few in the private sector, and hedge funds, bullion banks, investment house desks, back and forth to each other, borrowing currency from the Fed at lower interest rates to purchase this security, then really it has limited effects or consequences on society. But they have, according to the author, they have this unnecessary focus on whether Bitcoin has lived up to the goals of its creator and early adopters. That observation is unimportant, even if true. Focus should be on the Bitcoin utility for society today. Put together the mistakes, according to the author, of Binsel and Schaff to miss Bitcoin's appeal as a form of monetary insurance. This is what the author was trying to say. Now, when it comes to what is money, and that's why gold and silver have always been designated as money. They have to have 5 to 6 different things. They have to be fungible, they have to be acceptable, they have to be a store of value, they have to be divisible, and they have to be recognized in other capacities. I don't have the 5 or 6 off the top of my head. But the problem is that Bitcoin, because it is traded as a security at this point, has too much volatility to be a store of value. You could easily lose 3 to 6% in a given day, back and forth. Now, the same could partially be said for gold, but gold is something that has backed currencies for 5,000 years. So the volatility isn't in the purchasing power of gold, it's in the purchasing power of the currency that it's backed by. And since the dollar is no longer backed by gold, Bitcoin's not backed by gold, Bitcoin is denominated in whatever currency. The volatility of fiat currencies in the world today are the problem with that. Now, governments are going to have already designated it as a security. So until governments allow it to function in another capacity, it's going to remain as a controlled security, not free and open and Wild West to the public. It's going to be a security where it's going to be taxed, it's going to be regulated, it's going to be monitored, and it's going to be turned into derivatives by those that control the CFTC, the SEC, etc. And I'm talking, of course, the big banks. Moving over to oil. WTI crude was up $1.15 today as more Middle East tensions continue to reign, or I should say West Asian tensions. It's going to take a while before I fully make that transition in my head, so pardon me on that one. WTI crude was up $1.15 to close out at $70.30, while Brent crude was up 94 cents, closing out the trading day at exactly $74 a barrel. Well, the IMF has come out this week stating that their forecasts point to an unforgiving combination of low growth, high debt, and a difficult future, emphasizing that governments must work to reduce debt, rebuild buffers for the next shock, which will surely come and maybe sooner than expected. So the IMF, which one of their primary purposes is lending money to governments and countries that really are already in debt, keeping them in debt, forcing austerity, are now trying to say that, well, the big kahunas, the US, Europe, and the like, are now themselves too much in debt and they need to create their own austerity. Well, fat chance getting that through to the US government, to European governments, or anybody else who has had free reign over creating money or currency out of nothing from the printing presses and not worrying about whether the inflation or the debt has any meaning at all. And by this, I mean something new came out yesterday. Due to the announcement on Friday of $500 billion in 1 week that was created for the federal government in deficit spending, interest payments on the debt now top defense spending for the first time in history. The latest monthly Treasury report shows spending and revenues for the full fiscal year 2024 ending in September, with a federal deficit topping $1.8 trillion, and of course the national debt being just short of $36 trillion. The third highest in history, eclipsed only by the 2 COVID spending years. It's not for lack of resources, as tax revenues were up, but the spending continues to still climb. So we're at a point, the IMF is right, that the West relies too much on borrowing and on credit to just survive and continue. And this has always been the problem, is once debt reaches a certain level, then governments rely on inflation to make the debt less costly to have to pay off. But that only works if you actually pay off the debt. The federal government instead sees this long period of zero interest rates, ZIRP, and said, we can borrow to infinity. And they virtually have. The formula of 72 is you take 72 and divide it by the number of years to half. And right now the national debt is doubling about every 8 to 9 years. And with that being said, we're already at 35 trillion. We were at 20 trillion when Trump came in there. So in just the past 8 years, we've gone from 20 to 35 trillion, or 36 trillion, I'm sorry. And it only expects to get more, as we probably are going to reach 40 trillion sometime in the middle of next year. That's in that 8 to 9 year range. Looking at the data ahead, okay, today is 21st. We really don't have anything, leading indicators, no big deal. On Wednesday, we've got existing home sales. We've got initial jobless claims on Thursday. We've got global U.S. services and manufacturing PMIs on Thursday as well, new home sales. And then on Friday, we've got durable goods and University of Michigan sentiment report. Taking a look at the earnings for the week. On Monday, who do we got that's of any note? Nobody really that stands out. On Tuesday, we've got Verizon, GM, 3M, Freeport McMoran, GE Aerospace. What's of note? Texas Instruments. Then on Wednesday, we've got Boeing. That should be fun. AT&T, Coca-Cola, so that's going to be a big day. General Dynamics, Tesla, IBM, T-Mobile, and the like. We got one casino that's doing on Wednesday. Thursday, we got American Airlines, UPS, Southwest. So it looks like the airline day. Union Pacific. Not much in there. And then on Friday, we really don't have anybody that does stand out. So they'll be getting to more of the tail end of the companies. The big ones will have already, for the most part, announced. Anyway, I want to thank everybody as always for being a part of the Sirius Report community. Thank you for all of your input. Don't forget to subscribe, like, share, pass this on to anybody you think it might be of importance. And until the next time we get together, have a great Monday.